The fundamental data says I should be shorting the euro when I am trading it against the US dollar. How come? I mean, on the left, we have the overall news saying the euro is stronger than the dollar, but on the right, the 14 days news release, we have the euro weaker than the dollar. What does this mean? It simply means that in the recent 14 days, we've seen a lot more terrible news for the euro than we see for the US dollar. Put this all into perspective, look at the pair comparison, and let's specifically look at for the euro against the dollar. There it is. We have that for below the 50% mark, meaning you should be looking for short trades. Now, this is not financial advice. I'm not telling you to go short the market. But however, I personally short the market. I made a very good profit. But I'm beginning to feel this, I should have held it even longer feeling in the market. Because I just closed the trade like basically some minutes ago. And I closed it because I was getting FOMO. I was getting scared. Why? Tomorrow is Friday. Tomorrow is the day everybody closes. A lot of, not really everybody, but a lot of big traders close their trade because they don't want to have the weekend hold all the way to Monday. That's one. So the market is likely going to swing in one direction towards the evening. That is one aspect of the situation. The second aspect of the situation is that fundamental news is not making it any better for the euro recently. I mean, when I say fundamental news, I mean economic news data releases, right? Economic data releases, like, as you can see right here, this is an economic calendar for those who are fully aware of fundamental situations. Now, why did I close my trade in FOMO, even with the fundamental news backing me? I took a trade against, not really against my strategy, but not with my strategy, but it ended up in profit. At the same time, I still stepped out of that trade earlier than I ought to have stepped out, came back into the trade, and I'm too scared to hold this trade because I'm dealing with real money here, so I just stopped it all out. I'm less than the initial capital I started trading with, but I'm fine. It's okay. So what happened? What was the first trade, and why did I jump out of the trade with FOMO? Well, I saw price close below a clear structure. This is a clear structure right here. As you can see, this is a clear structure right here. After seeing price close below this clear structure right here, what did I do? I decided to short the market immediately. I short the market, and I was aiming for the bottom of the entire run up. Basically, I was aiming for the bottom of the correction. However, I got caught up in FOMO this early morning. When I looked at the chart, seeing the chart pull back, I closed out of the trade. Later today, I noticed the chart has started returning to its proper direction, and I felt so pained. Then my strategy kicked in and said it's time to sell. I decided to jump into the trade again and sell. However, that was when Friday analogy crossed my mind. Tomorrow is Friday. The market is likely going to change direction a little bit. Maybe not aggressive, but a little bit. Your stop loss position is too narrow and you're going to get stopped out if you stay there. You most likely will get stopped out. It's not an assurance, right? So all of that in mind, I told myself, you know what? It's best to avoid the risk. And that is what you need to do in trading. Risk avoidance. The best thing you ever do as a trader is to avoid risk rather than jump into risk and make money, but in the long run lose everything. Why do I say so? So I took a trade where I made a total of $5. I'm going to use a limit order to show you what it was. This is exactly where my trade entered, and this is exactly where I came out of the trade. It was a $5 profit, right? As you can see. Then I entered the second trade, which you can see the second trade here, but you can see my stop loss is at $4, meaning I'm literally about to give back everything I made to the market if the market moves too much against me in today or tomorrow's swing. Hence, I decided, you know what, let's just let it go. This particular opportunity, we're going to let it sit it out and let it go. That's basically what I'm doing. I'm letting it go. Because it's best I don't take a risk than I take a risk and lose so much that I cannot bear. Second problem is this: the actual strategy says my stop loss is supposed to be up here. In case you didn't notice it, there's something on my chart that shows purple line. The purple lines are where my stop loss are supposed to be. My stop loss is supposed to be alongside that purple line, following the purple line as market moves. In case you're wondering, it's not a normal indicator, it's a pine script. I think a lot of people know how to use pine scripts, but it's a pine script that follows the 2050 EMAs and market, as well as market structure. I then personally overlay it using fundamental situations. How do I figure out fundamental situations? Well, it's simple. I simply go to investing.com, economic calendar, pick up everything I find in that calendar, dump it into an Excel sheet. I've been doing this since 2025. I have information all the way back to 2025, as you can see here, January 1st of 2025. And then this Excel sheet is filled with lots and lots and lots of calculation. In case you want to learn how to create something like this for yourself, there's a playlist at the end of the video, which then gives me an overall stance of the latest sets of news for each currency, as well as the latest set of news in the last 14 days and what I should be doing. You can see basically the euro against the US dollar is quite neutral, and the British pound against the US dollar in the last 14 days says that the fundamental or the economic stance is quite bullish. So I need to start getting careful of selling the pounds against the US. But for the euro against the US dollar, there's still a slight chance. And let me just give you a little bit of show of it. This is just for visual aesthetics so that it's easier to read. You can see the euro against the US dollar in the last 14 days. This is the 14 days on the right, overall on the left. The last 14 days has been 60%. You see it turning green. Basically, when I put it in this manner, you get to see every other currency alongside with it. Now, I'm not saying you should dive into the market and go buy the British pound against the US dollar. News is released every day. News could come out tomorrow and the US dollar will suddenly gain massive strength. But it doesn't mean that this is not accurate also. Now, what is this? What is all of this doing for me? Well, back to the meat of the show, the US dollar against the euro, right? That is the meat of the show. And as you can see here, in the last 14 days, I should be selling, which is what I did basically. And I did it good. I had made my profits. I need to step out of the market. And that's basically it. My next trade, I have a lot of strategy for different markets, and I'm looking through each and every one of those markets. I have some pending orders here I want to show to you guys. This is following another pine script. I call it the DAX strategy. Basically, it's the QMRO QMC strategy. That's what it is. So what's the QMRO QMC? Quasimodo continuation and Quasimodo reversal strategy. Now I have pending orders here. You can see that this particular strategy on this time frame, it has a 1.6 profit ratio on the New Zealand dollar US dollar. So statistically, it's a good one. Now I have some pending trades, or rather some pending orders here. Let me look for it. Yeah, so I have one for the British pound card right here. So my strategy is saying at this point I should go long, which if you are going long right now, it would be in quite some a small drawdown, if I should say. We'll be in a small drawdown right now. So let's say you were going long right here at the candle open. Currently you would be in, I would be in $1.86 of drawdown. But mind you, the stop loss is absolutely crazy, right? The real stop loss is down here, right at this point here. Then I have another opportunity, right? A QMC, a Quasimodo continuation. So it says there's a Quasimodo continuation right here. So I'm placing a trade aiming for the stop loss just below the end. My take profit, my entry just as structural liquidity right here, and my take profit at 2.5 away, and I'm risking $1.28. That is like 0.01 lot. My next opportunity is still a Quasimodo trade. This time it is a Quasimodo reversal, which is quite risky. I prefer the Quasimodo continuations most times, but the Quasimodo reversal is good. I'm also going to show you the strategic stance of this thing. So on the 1 hour here, this strategy has a 1.2. So this is like the lowest profit factor of all the strategies I have seen in my own book. This is the lowest. It has a 1.2 profit factor, but I'm just looking at it for, let's see if it works a little bit good for me here. From time to time, I'll check up on other strategy and see how it works. This, I didn't get an opportunity today. I got an opportunity 2 days ago and I didn't take it. This is my institutional London breakout for AUD US dollar. And you can see that if I had taken 2 days ago, there was an opportunity. You can see the long here. It says go long. I would have gone long here, right here. Stop loss at the end of the Asian region range and at 6 o'clock. So the way this trade works is I'm supposed to be aiming for 1 to 2, right? 1 to 2. But if I don't achieve anything, even if I don't achieve a good profit, at exactly 6 p.m. I'm going to close the trade. So I would have closed this trade if I had gone into it. It was on a Tuesday, right? 2 days ago. I would have achieved a 0.7 profit, 0.7 risk to reward ratio profit. Now, there was no chance on Wednesday. There's no chance. Yes, at today there was no chance today. As you can see, there was no chance on Wednesday. Really wish this candle had appeared inside the London breakouts. I would have taken a sell if it had happened inside the London breakouts. Obviously, this would be the strategy. And at 6 p.m. Nigerian time, as soon as it hits 6 p.m, which is right here, I would have closed the trade with whatever profit or whatever loss it had accumulated. And you can see it has a 1.561 PF. That's a profit factor. So for me, it's all about statistical edge in the strategy. One. Secondly, fundamental backed situation. If the fundamental backs that direction of move, like that direction of trade, I'll take it. You get, that's just basically what I do. So I'm glad you guys saw the P&L. Oh, I didn't show you guys the P&L, so let me just show you guys the P&L. The P&L has gone back up a little bit to $45. You know, we were down $39.64, so it's a $50 account. This is where it started, $50.90. We've been in serious drawdown for quite some time, and the last two trades I took, the euro against the US dollar, seem to have helped my life and my account balance. You can see $5.41 of profit. It's a good one. I like it. It helped. It really helped. I won't lie to anybody. I'm not going to pretend like I'm some smart guys and do it. This is the entirety of it. I lost on Monday, won Tuesday, Wednesday, Thursday, lost heavily again on a Monday, lost on Tuesday, didn't take a trade on Wednesday, and then came today and took a trade, made good profit. I'm scared of trading on Fridays. So now I'm beginning to realize Mondays seems to not be my day, but I can't decide in 2 weeks. I mean, 2 weeks is not enough. I really wish I could connect my TradingView demo account here. I would have connected the TradingView demo account to see all those records, but no pain, no gains, no pains. It's not bad. It's okay, in my opinion. So that's all for today. See you guys tomorrow. I'll update you guys if I do take a trade. And we're going to be looking at the markets on Saturday also. Saturday and Sunday, we're going to look at the markets through the lens of technical strategy. That is the technical strategies I have. This is a total of 5 strategies in total. So looking at all 5 strategies, right? And then looking at the markets based on fundamental and which of them seems to be heading in the direction of that strategy. All right, peace. See you guys. Bye.